Gentlemen, especially those who are standing in the back, if I could kindly request you to take your seats, we are ready for our next session. If I could request both our speakers for the session, Mr. Mudassar Aqil and Monis Rahman, to join me on stage. Mudassar Aqil is the Group Executive Banktech for MTN Fintech Africa, and we're very, very fortunate that he's extended his stay to make sure that we can have this session. And Monis Rahman is, of course, one of the partners of the conference and also the CEO of Dukaan. So Mudassar and Monis, I will hand it over to you. Ladies and gentlemen, please put your hands together, and this is our fireside chat on mobile money, e-commerce, digital lending, and payments.
Assalamu alaikum. Welcome back. I'm back. And it is my pleasure. So prior to getting started, if people could please sit down, zara aage ki taraf aa jayein. We are in for a real treat. And it's a very rare treat, and I think this is probably one of the only places that we have access to the sort of information you're going to hear about. So again, if I could ask you to please have a seat, baith jayein please, and we'll start the session. Very honored to have with us today Mudassar Aqil. Mudassar is well known to most of us in the industry. One of the few people who's been involved in this industry, the digital banking, digital economy, from its inception, has been a key player in many of the milestones of the industry, from launching the first smartphone wallet, the SimSim wallet, when he was CEO of Finca Bank. Then he moved on to EasyPesa, and we've seen the wonderful things that have happened in EasyPesa. It's a fantastic team. They're here today. And a lot of the groundwork for the profitability that we're seeing today, I think, was laid during the time you were there, Mudassar. So well done again. And most recently, Mudassar has moved outside of Pakistan to Africa at MTN, where he's doing some amazing stuff. And those who don't know about MTN, you'll hear a little bit about it, but it's a massive scale and it's a massive sort of market across Africa. So well, thank you very much for being here, Mudassar. It's a real treat to have you here. So the first question is, why did you leave us in Pakistan after all of the great things you did here, and now you're in Africa? What are you doing in Africa?
Thank you, Monis. Okay. Thank you, Monis. Real pleasure to be back in Karachi almost after a year, and what I'm doing in Africa. So I'm working for a fintech which is backed by an MNO called MTN. MTN is the largest telco in Africa with presence in 16 markets with close to 300 million subscribers.
Wow.
So you can, just to put things in perspective, 1 out of every 4th African uses MTN. So on the back of it, they also launched fintech business about a decade ago, which has now become the largest fintech in Africa. Also, MTN Fintech has roughly 70 million MAUs across 16 markets. My responsibility is to manage their lending business. So it's been a very rewarding experience. You know, Africa is a very diverse continent, unlike what we think that it's all homogeneous, which is not. And you know, regulatory landscape is quite interesting. Obviously, economic differences, geographic differences, etc. So I'm learning, and it's a large-scale operation. We disburse on an annual basis close to $2 billion in loans, about 100,000 loans a day.
Wow.
So it's a factory. It just runs at a very massive scale, the market is growing very, very rapidly. Just incredible things are happening in terms of you know, the penetration of financial services and lending included, just like in Pakistan.
So, you've mentioned 16 countries across Africa, and those of us who've had a chance to go to Africa realize it's a continent and not a country, and it's very diverse. There's a regulator in each of those locations. We have a hard enough time complying to one regulator in one country, and you've built this platform across 16 countries. So, I mean, what would be very interesting to understand is, it's a massive scale you're operating at across the continent. What are the similarities and the differences between what you're seeing across Africa, and I know it's not one brushstroke, as compared to, you're an expert on the local ecosystem, so what are the analogies and sort of lessons we can learn across both geographies?
Yeah, so lots of very interesting things. So, first of all, I can just briefly touch upon the operating model. So, because you said, how do we manage the regulators? So, it's actually a great example of how banking sector and the fintech have joined hands, right? So, all of these loans are being given using partner banks' balance sheets and their funding, right? So, we are essentially using our wallet platform and tech for credit scoring purposes. So we provide data, and then we collaborate with multiple lending fintechs also, depending on the market. And then there's always a banking partner, and we have a whole list of banking partners in every market.
If I can just stop you there, I know there's a lot more to talk about here, but this is a very interesting point that is a bit of a deviation from what we've seen here, where you'll have one bank or financial wallet provider that is doing both the acquisition through the wallet as well as the lending, so it's sort of one. And the model in Africa that's working is you sort of create a marketplace of lenders. And that seems very interesting in terms of an evolution for the local ecosystem. So, if you could just highlight a little bit more about that, how do you plug in more than one lender into one core platform and make a marketplace?
Yeah, that's exactly is the model. It's a marketplace model. It's a one-to-many architecture, and the multiple banks partner and they place their competing loan products in the marketplace, and then people can actually choose that which loan pricing is very transparently available, the loan tenors are available, and then but I mean obviously the credit goes to the ecosystem which has been built painstakingly by people who have come before me, obviously, and the MTN fintech folks. But then equally to the foresight of banking sector in Africa, where they are actually very actively looking at fintechs as partners, not as competitors, which I think is a very important point that Pakistani industry needs to internalize, that there is a lot of complementing skill sets and assets on both sides that you can create a much bigger value together. And that's happening, I think, much more successfully, in my view, in Africa compared to Pakistan.
Do you see that happening in Pakistan, where banks will collaborate with other partners that have already acquired merchants and share loan books, so that, like split apart the work in a marketplace manner? Do you think this can happen in Pakistan?
I think we will see that more now, in my view, in the coming years. It has not happened successfully. I mean, I've tried my best in the last few years, and there's a lot of I think close-mindedness, and it's part of the journey, right? It's the maturity of the business models, etc. But a lot of our digital people in banks think that they can be a bank. A bank is a complex institution. It's highly regulated. And it's impossible for it to innovate inside the bank at the same speed the way fintechs can create new products, right? So that's the first thing that they have to understand, is that they have balance sheet, they have access to low-cost funding, they have a very powerful license that they can leverage and then sort of like use the innovation which is being done outside in win-win partnerships. So I think that mindset has been lacking, because a lot of time people want to say this, I want to have it all under my control. It has to be my app, it has to be my IP. And I think the world has moved on. Partnership ecosystems are really how the marketplaces are being built. And I'm sure they will now come to this realization soon.
So this is also a very interesting point you made, and we've been hearing this throughout the day. Salim Saab also spoke about this, how it's important for everybody to partner and integrate in order to make this succeed. Very wise words, but we've actually seen it play out in Africa, and that's exactly how it played out, and that's how they grew. Now, another analogy between what is happening in most countries in Africa and Pakistan is the lending is happening on mainly on data because of documentation which is poor. And when you give loans on data and your credit scoring segment, you tend to have a higher risk because of the lack of documentation. The numbers work in the end. But the pricing of those loans often ends up being more than what we're used to seeing by commercial banks. And so the question is, what is exploitive? What is too much in the context of loans to this undocumented market? Where do you draw the line and say this is exploitive, it's too expensive, ye loan nahi dena chahiye?
Yeah, so Monis, this is a very, very important question. The question we get in our space get all the time. But before I answer that, I just wanted to highlight your previous question was important about similarities and dissimilarities, right? So I want to, the reason why I wanted to come here and speak is to identify that how, similar developing markets are. And then, so there are a lot of things that are happening in Africa which are identical to which are happening in Pakistan. And what are some of the things that they have done better than us? And then obviously they can learn a lot from us also. It's vice versa. But so, for instance, if you look at, is it a massive cash economy in majority of African countries? Yes. Do they have a balance of payment crisis? Yes. Do they have a low taxation base? Absolutely. Is SME credit a challenge? Yes, it is. Regulatory environment actually in Pakistan, in my opinion, is superior to majority of the 16 markets that I've seen. I think only maybe 2 or 3 handful of countries can compete with the maturity of our regulatory ecosystem that we have here. But then at the same time, when we see the usage of digital financial services, majority of the African markets in sub-Saharan Africa, the smartphone penetration is at best equal to Pakistan, but majority of the time lower. And then so the entire ecosystem is, when you look at the infrastructure, is actually not really more developed by any stretch of imagination compared to Pakistan. But when you look at penetration and usage among the masses and at the base of the pyramid, it's actually much more prevalent. So I feel people have done more with less over there, right? So I think that's a big takeaway. And I think a big part of that goes back to, this collaborative work which has happened between MNOs, between banks, between fintechs. And I think that's really the secret sauce, if you ask, which I think is still a little bit lacking in Pakistan.
So the economics of these loans, back to what is exploitative pricing?
So I think this is very important to understand. So first of all, let me just share with you let me give some Pakistani numbers to the audience so that they understand what's happening in Pakistan. Because the beauty of digital transactions, that they scale in a stealth mode. And you don't even realize that what a sea change is already happening around you, but it's happening. So it's happening, for instance, for digital loans in Pakistan as we speak. So on today's run rate, if you take the 2 largest digital lenders in Pakistan, which is JazzCash and EasyPaisa, because I'm privy to some internal numbers, I won't break out numbers by any individual player. But on today's run rate, we are looking at annualized loan disbursements of close to 200 billion rupees in Pakistan today, right? That's about $750 million in small digital loans which is being disbursed. Now, you look at this number and you look at the entire consumption finance happening in Pakistan, consumer finance, and you will see that, and this number is not really anywhere near the saturation point. So I was doing an interesting analysis on the African market, and what we were trying to do, and we were saying, take the average loan size of a digital loan, which typically varies depending on the sub-Saharan Africa market between $5 to typically $30, and you divide it by the average per capita GDP of that country, right? And you see where you rank. So we saw that there are 3 or 4 countries who are really high, And then there are a whole bunch which are low, and the baseline is about 1.5% of the per capita GDP, right? And we said, okay, so 1.5 is the bare minimum that, you know, one should expect that, you know, a country with all the right pieces in place in the digital ecosystem should be doing.
And these are the average loan size you're talking about. This is how you size the loan.
Exactly, right? So the average loan size in Pakistan is about 4,000 rupees when it comes to a digital loan, right? So we are giving now more than 3 million such loans a month in Pakistan. On an annual run rate, like I said, about 200 billion rupees a year. When I apply this GDP calculation, we are already at close to 1.5% threshold of our per capita GDP, which is about $1,700. And for instance, in Rwanda, they're already above 3%, you know, on the same metric. So Pakistan can easily double this number. There is enough space here. The other thing that I just want to quickly touch on before I get to the unit economics and pricing and, you know, challenge some myths over there, that what we found out, so for instance, I went to Ghana to understand that, you know, I saw that average ticket sizes are slightly larger. So, you know, how this money is being used and how these people can afford a larger loan. And what we found out that almost 1/3 of the borrowers in Ghana are actually taking these digital loans for business, not really for personal use. So because the small MSME financing is not available and it's not really, you know, digitalized, so people were actually, and these loans are scaling very nicely, were taking these loans to do very small businesses. So I spoke to a borrower. This woman was in a selling ladies' undergarments in a massive market, you know, of micro entrepreneurs, right? This is like a Itwar Bazaar in Pakistan kind of a market. And her entire inventory was on her head. And that she had bought from the loan that she takes from us. And we don't actually know that she's a small business user, except for when we look at the data and we can say that, you know, this is not really an individual user's usage behavior, and that's why I spoke to her, to find out what's going on. So I believe, I'm quite certain that this is exactly what's happening in Pakistan, right? But Pakistan is slightly ahead in many ways because all of these loans are, because in Africa and many markets, these loans are not required to be reported to credit bureaus. Unlike Pakistan, where all of this data is being reported to credit bureaus, there is a treasure trove of this information which is available to everyone, all the banks who want to use their balance sheet, and if they want to lend to them, they can. They don't have to necessarily have GSM data or the wallet data. So there's a lot of good information which is available, which I think there are assets which can be utilized as one point. The second one on pricing is that the simplistic way to look at the pricing is that you say कि अच्छा ये 7 दिन का लोन है और इसकी pricing जो है वो 0.5% per day है, तो ये this is like 180% interest, so ये तो exploitation हो रही है, right? That's a banker's way to look at it. So, or a person who actually does not need that kind of loan, that's how they would look at it. But if you look at the actual unit economics, how this business becomes sustainable, and this is why billions of dollars are being disbursed on less than 5% default, even in Pakistan and also in Africa, the default rate is actually below 5%. So typically on these kind of loans, we refer to them not as interest rate, but the total take rate, which is a combination of an access fee or a daily interest combined, right? So that typically ranges between 6 to 8%, right? And typically people take these loans for less than 14 days. So you are giving somebody credit for 7 to 14 days, and they will pay back, you know, anywhere between 6 to 8% interest plus fee for that time duration. Half of that revenue or take rate goes to cover loan default, right? So अगर आपने 100 रुपए दिए, 106 collect किए, तो half जो था वो 3 रुपए रह गया. So 3 रुपए का मतलब है कि अब आप 3% default rate के ऊपर काम कर रहे हैं. You have to be super good. And the remaining 3% have to be now split between the partner bank, the lending fintech, and the MNO, right? So if they don't even make 1%, then why would they be in this business, right? It doesn't make any economic sense at all. So basically, this is how this business works. And on the other side, there is a user who is completely financially underserved, who has a short-term cash flow requirement, and this is a reasonable fee for them if they have to pay 5 or 6% to actually have this bridge loan available to them. That's essentially how it works, right? So I think everybody needs to first understand the target segment and their need profile and what's happening in their lives, the unit economics of making this business actually commercially sustainable, and then form an opinion that, okay, this is bad, this is haram, and I have a halal model for it, right? So unless you have it, otherwise you leave these people exactly how they've been for hundreds of years, which is unserved, with no dignified way, to be treated as actually truly, addressable market segment, which they actually are.
So you said something that's very interesting, and I'm sure we're seeing it here. The nano loans, which are running, I think we calculated 5 million type nano loans that are being clocked in. I mean, it's really adding to the credit scoring data, first of all. But the second thing is, we suspect, in fact, we know that a significant portion of those are actually business loans.
Yes.
But because you're nano scoring them, they have much higher markup rates than you would expect of a productive loan where the risk is low. So because there's a lack of capital, businesses with high margins are taking these nano loans and repaying them and able to grow their business. But what we're doing is we're leaving out a very large segment of SMEs who may not have the kind of margins to be able to use a nano loan for their business. So that's where supply chain financing comes in, where it's a productive loan and you're scoring it against data. So when you look at Africa, nano loans have been wildly successful in Africa. They predate nano loans in Pakistan. They've done well. What are you thinking as lending head of MTN across Africa, 16 countries, on the supply chain side? How can you help businesses grow through lending beyond nano loans, which seem like it's a misfit for the use case?
I think that's the next frontier, right? And this is where a lot more work needs to happen, because the data on supply chain financing on small businesses that you talked about, and you've got a great model in Dukaan that you have built, it's really lacking. And I have not seen a comparable model that has scaled anywhere so far in my experience in Africa, and I've heard some examples in Latin America, etc. But I think that's the silver bullet that we are looking for, at least when it comes to the supply chain for the retail merchant segment, for sure. And that's exactly why I gave you the Ghana example, where we don't have visibility that these are actually businesses. Yeah. Because their payments are not digitalized. We are not embedded in their supply chain. So we are now deducing from looking at their consumer wallet behavior that they're actually using it for business use. So I think that's where everybody needs to work, but and this is why this conference is so important for supply chain finance, because in the supply chain finance, the bank and the loan disappears, right? Because it becomes embedded finance. And you actually focus on solving the problem for your target segment, which is the retailer and the merchant. And then in that solution, credit is actually part of the solution, is embedded.
That's lovely. Yeah. So you've seen a lot more than a lot of us. You've traveled throughout Africa with a clear lens. You've gone to these markets. Of course, you've seen everything in Pakistan. What are some future trends that you're seeing across both markets? Where are things going?
Yeah, so I think very similar trends as in Pakistan. So first of all, regulators are very keen to everywhere to introduce frictionless payments that we are seeing in RAST in Pakistan. So there are 40 countries right now in the world who are working on a similar real-time payment system like RAST.
Which we are saying is a game changer, by the way.
Which is absolutely a game changer.
For the local economy.
Unified QR. I think every single country in some way or fashion is working on a unified QR payment also. All the countries are focused on making P2P cheaper. So, person-to-person payments, they want to remove the friction from there also. Smartphone penetration is a priority. Access to broadband, mobile broadband is a priority in all of these markets. But having said that, all of these markets have problems also. So, I mean, a lot of time, we get into this doom and gloom kind of a mindset in Pakistan, कि यहाँ कुछ नहीं change हो सकता जब तक government ये नहीं करेगी, right? मगर, I mean, in some of the cases, I've seen obviously great examples of some superb regulators and reform work happening in some countries like Rwanda, but then I've seen some mind-bogglingly nonsensical stuff happening also. For instance, in Ghana, there is a 1% e-levy on all digital transactions that has been imposed by the government to meet short-term revenue shortfall. I mean, we've seen similar kind of stuff in Pakistan recently. आप सबकी salaries पे जो नए tax लगे, so same stuff is happening here also. That doesn't make a lot of sense. But despite all of that, that's the amazing thing is that people are hungry to actually adopt digital financial services because it actually adds a meaningful value to their daily lives. Yeah. The same thing is happening. I mean, obviously, the core use case is digital payments, and then on the back of it, there's a whole ecosystem of startups and fintechs who are riding on top of this, new rails of creating new value, partnering with other fintechs and banks. And people are, hungry to adopt all of these services. So there's a sea change coming. And then when you hit the inflection point, as mashallah, I was speaking to Easy Paisa team today, and the numbers that they're sharing now, and I'm hearing from JazzCash colleagues also, they're also in, mashallah, doing very well, because I think both of the organizations have crossed the inflection point. So the marginal cost after that of growth in a digital infrastructure and platform is close to zero. And the speed is exponential, and that's when the amazing things start to happen. So I think in many of these economies this is happening. And in Pakistan also there is a tremendous amount of upside that everyone needs to embrace. And all the colleagues from commercial banks, I think they need to really get into a win-win mindset in terms of how aggressively they can partner with fintechs, because there's plenty for everyone here, in my opinion.
So I've got a bit of a story I just want to share on the back of what you said. We have a fruit seller, a lady who sells fruit to our houses. She goes and gets fruit wholesale, and we order and we pay her. And she was telling me that she takes a loan every month from JazzCash. And I was playing devil's advocate, and I said, "वो तो बहुत expensive है, वो महंगे आप क्यों लेती हैं वहाँ से?" And what she said just opened my eyes, because we can't relate to a lot of the cash flow problems. And she said, at the first of the month, I have to pay my mother 5,000 rupees, I have to pay my rent, I have to make all of these sort of payments. And my income is coming 1,000 rupees a day, 800, 1,200. So I take this loan every month, I pay it on time, I'm never late, and then I repay it from my sort of daily income. And I said, but the markup? She said, it doesn't matter, because I have access to the cash. I didn't have recourse after that. So there's definitely a productive sort of function here. So that's just one thing I wanted to put out there. The other thing was, we've been going to China and talking to manufacturers of these QR code sound boxes, which took off in India and China, but then we didn't see them anywhere else for a number of years. So we're talking to 9 manufacturers. All of them now, for the first time, are selling sound boxes internationally, because they used to sell only in China, huge sort of demand in China. They're doing it internationally because now they're seeing unified QR codes, to your point, appearing in various countries, and because the market's saturated in China, all of them are now starting to sell internationally. So another sort of a trend like you were indicating.
So I think last year was the first year when wallet payments actually exceeded card payments for the first time ever. Now, the chart is showing like it's just the curve is just going up massively, because the developing world, which is majority unbanked or underbanked, is all adopting digital payments, and QR is going to be the cheapest way to scale digital payments to all of the SMEs. The devices are very, very inexpensive. They actually accept, like any other POS machine, card also, QR also. It's all embedded. It's a beautiful user interface. It works for low-income people. It speaks. It's fantastic.
Mudassar, thank you so much for all of the insight you shared. Our time is up, but because we have you, with your, Hamza bhai, please, your permission, I just want to take a question or two from the audience because it's a rare treat. So I'll open it up to 2 questions, and then I think we'll have to move on. Asif bhai.
So they don't feel like going to a riskier segment and make money from that. So why did it happen there? Why, I mean, the willingness, is it the willingness, or is it something that forced bank in those markets to come and join this revolution, and or they looked at the from opportunity side that this is a huge opportunity to capitalize on, and maybe it's an easy customer acquisition, maybe it's a quick deployment of funds to these segments and make money. And how is the market different in terms of lending to the government in those markets versus here? Because this here in Pakistan, lending to the government is the easiest, safest piece that, you know, instead of putting 5,000 field force on the ground and doing disbursement, collection, and all those challenges versus, you know, have 2 people in the treasury with 2 buttons, the money is disbursed. After some time, money comes back with a profit on it. So what is the reason there that it happened, it's not happening here?
It's a great question. I think so first, majority of the world is now experiencing very high interest rates, right? So the opportunity to place money in zero risk securities is everywhere. And majority of these countries, the governments are very aggressively borrowing from the market, so no difference. The quantum might be different, obviously. So honestly, if you ask me, I can't put my finger on it, but I think there is probably some lack of ambition, sometimes I feel, or collaborative mindset. The incentives to innovate are probably no different there than here. But a lot of these things, you know, are pushed top down. So I think it's a leadership question mark, in my opinion, for the banking industry leadership also. Because yes, if you look at it strictly from a short-term perspective, you know, there's no problem and there is no incentive. But if you take a 5-10 year view and you look at, you know, where the trajectory is going, and now, you know, the regulator is really showing its intentions. It has given 5 digital banking licenses, and you look at what happened in Brazil in Nubank, how quickly it scaled, you know, and some of the other digital bank examples. You would want to do something. You need to have a point of view. I don't know how many of the current leaders have a point of view on this.
Great. Thank you. Yes, in the back. I'm sorry.
What is one thing that worked there, it's not working in the leadership?
I don't have enough information to really say that. So, I mean, I think it'll be not fair. Yeah, so.
Roxana Narija. I just have one question, actually. This is something which we have been wondering a lot about, and you touched on this point about collaboration between the fintechs and the banks, and they should not consider each other the competitors. I mean, that is a thought process, I think, that we have been hearing, that is the way forward. But coming from the bank's perspective, though I'm with a digital bank, not with a conventional bank, but coming from the bank's perspective, what advantage a bank has to share its established infrastructure with the digital bank? Because they have worked towards establishing that footprint in the market, providing that infrastructure in the market. Now they have been pushed, or they have been encouraged by the regulator to share that environment with a digital bank, with a fintech, and obviously they are hesitant to do that. So please touch on this point, what advantage a bank can get from this collaboration, and what should be encouraging them in order to move forward. Thank you.
Great question. So Roxana, in short, innovation and scale, right? So you're getting access to innovation done by other people, and you can actually achieve scale, and you can leverage your balance sheet that you have much more rapidly if you join hands with, you know, it's like, you know, what if there was no Play Store, or if there was no Apple App Store, and Google and Apple decided that we will make all the apps ourselves to launch on our platform, right? So banks really need to think about that, you know, our balance sheet and our license can be utilized as a platform, and we can actually really optimize our return on assets and how do we actually make more money in this business by joining hands with all of these people who are doing this wonderful new innovation. I think that's the mindset that I would think is the answer.
So we have a lot of hands up. I'm seeing it. We're out of time, and Hamza Bhai agreed to 2 questions, and I know we have to move on. There are people waiting. Mudassar is here. Feel free to reach out to him. Ladies and gentlemen, Mudassar Aqil.
Thank you. Thanks, Monis.
Hamza and Monis, we need your efforts to give a thank you memento to Mudassar. And Monis and Hamza were both right. This was quite a treat. So thank you very much for the knowledge and also for taking some questions. But like Monis said, Mudassar Saab is here. So please use that time to ask him whatever questions and follow-ups you need.